Foremost means more. More training, more information, more ways to grow your business. Find out what Foremost can mean for you at foremostagent.com. Click on Foremost Means More.
AIG's John Doyle, CEO of the Global Commercial Insurance, gave his perspective on conditions in the commercial lines insurance marketplace during the PLUS D&O Symposium in early February with Carrier Management Susanne Sclafane.
You know, we're on a terrific path. We have some work to do to improve our operating performance and get it to the level we want it to be. So I'm bullish about that. There are some big challenges confronting the industry. The interest rate environment, obviously, among them, the economy being, fairly weak for sure. So that certainly affects the supply-demand equation quite a bit. And I think what you see in the U.S., the pressure point in the U.S. is that, particularly in longer tail liability lines, is that they're capital intensive and quite interest rate sensitive. So the industry, we need to generate a better underwriting result than historically the industry has to generate an adequate return for investors. So that's the pressure point for everyone. So, I think the market's quite unique in that there's an abundant amount of capacity out there. So there's no shortage of competitors, but I do think the market's acting in a fairly disciplined way in that we're all really seeing a lot of the same pressure points and trying to respond to that. So pricing is up, and I expect it to continue to increase in the U.S. We see rate change, a great variation of rate change, within our own portfolio from major product to a particular risk within a product. But on average, we haven't reported our fourth quarter results yet, so we haven't gone public on the fourth quarter rate change. But through 3 quarters, we're seeing high single-digit rate increases on average. So again, some accounts going flat, and occasionally even a risk will go below expiring, but on average they're up high single digits, and many accounts are going for much higher than 8-9% on average. So we try to be smart about the mix of business in our portfolio and select risk and price risk accordingly. So it's not a across the board approach on our part, but we know on average we need price increases.
Doyle went on to describe the differences between domestic and international markets and responded to the question of when commercial lines pricing would peak in the U.S.
I think outside of the United States, generally speaking, rates are more adequate to begin with. I've listened or read about some of the earnings calls as well, and I think the one maybe twist I would put on it is that, again, generally rates are a bit more adequate. But many international markets are a bit more competitive. We are getting rate increases in most geographies around the world. Having said that, they're not as meaningful as the increases we're getting in the U.S. I expect in the capital-intensive lines in the U.S., given where I expect interest rates to be over the next year, maybe 2 years, that rates won't peak now, that we'll continue to have rate need, and that prices will continue to increase. So, I don't have a crystal ball in terms of when they'll peak, so to speak, but to generate the right kind of return, a double-digit return, we need more price. And so, that's, we're seeing, I think, most companies operate with a fair amount of discipline in that space, given those challenges. I mean, I've also read in some of the transcripts from the earnings calls, questions from investors around whether or not a double-digit return is still the target. And so we think it needs to be, and that's what our target is. And so we expect to continue to push price.
Doyle went on to talk about the actions AIG has taken in pursuit of double-digit returns and the company's recent success in improving accident year underwriting results, accomplished in part by reshaping the portfolio to focus on what he terms higher value lines, like those in the property insurance arena.
It's a really exciting time for us as a company, rebranding back to AIG, all the restructuring that's happened at the company over the course of the last last few years, it's now an absolute focus on the core and improving our underwriting results. So we're very, very excited about it. And there's a lot of energy in the company around doing that. So we really have three kind of key levers that we're looking at. One is on the underwriting side in particular, and one is managing the mix of business, right? So higher value products and reducing the amount of lower value products is an important lever for us. Under the general heading of a program we call Underwriting Excellence, which is really capturing the information advantage a business of our size should be providing to us, and building better tools to select risk, to price risk. Under that heading of underwriting framework or underwriting excellence, that's a lot of things we're doing on the underwriting side to improve our results. And then lastly, on the claim side, we've made a very meaningful investment in our claim infrastructure all around the world, and that's really yielding important benefits to us.